Welcome to this video on Notice 2024-02, known as the Grab Bag Notice. Join us as Rebecca Olson, Senior ERISA Attorney, discusses a provision included in this important notice.
The IRS Grab Bag Notice included guidance on a number of Secure 2 employer tax credit provisions. Secure 2 includes an increase in the small employer plan startup cost credit so that the credit for an eligible employer with no more than 50 employees is increased from 50% to 100% of qualified startup costs. The credit does remain at 50% for employers with up to 100 employees. In particular, the notice clarifies the eligibility requirements for the startup costs. So an employer is eligible for the startup cost credit for a taxable year only if the employer was an eligible employer for the first taxable year during the employer's 3-year startup cost credit period, and the employer is an eligible employer for the taxable year with respect to which the startup cost credit is claimed. So an example will probably help illustrate that. So for example, if there's an employer that had more than 50 employees for the taxable year preceding the taxable year during the employer's 3-year credit period, then the employer will not become eligible for the increased startup cost credit in a subsequent year. That is because they were not eligible for the first taxable year. This was not our general understanding of eligibility for the startup cost credit that has been in existence for some time. So that is something that we are requesting clarification on from the IRS. In addition, an employer that was eligible for the startup cost credit for a taxable year that began before 2023 may be eligible for the increased startup cost credit, but only if there is a taxable year during the employer's credit period that begins after 2023. So Secure 2 also provides for a new employer contributions credit, and the notice provides guidance on a number of items with respect to that credit. The notice confirms that the employer contributions credit is a separate tax credit and is not subject to the limits that apply to the startup cost credit. So there's some questions around whether that maximum startup cost credit would have some effect on this, and it is clear that it does not. Similar eligibility requirements apply to the employer contributions credit and the startup cost credit. So for example, on the previous slide, we talked about being eligible that first year of the credit window in order to claim the credit in subsequent years. And that also applies to the employer contributions credit. The employer contributions credit has a 5-year credit period versus the 3-year for the startup cost credit. So when you're determining the 5-year credit period, plan establishment is the date on which the plan is effective with respect to the eligible employer. This is similar to the rule for determining the 3-year startup cost credit period, except that the employer is not permitted to elect for the first year of the additional employer contributions credit to be the preceding tax year. And when the employer is determining the credit, self-employment or other non-FICA wages do not count towards the $100,000 wage limit. So recall that the additional employer contribution credit is not available for contributions made on behalf of employees with more than $100,000 in wages for the year. But because those self-employment and other non-FICA wages do not count, then the employer may consider contributions to an individual who has earned income in excess of the $100,000 that is not attributable to Section 3121 FICA wages. Examples of employees to whom this apply are going to be your self-employed individuals, including partners in a partnership, or certain state and local government employees. And then finally on this one, contributions are taken into consideration for the same taxable year that a deduction would apply with respect to that contribution. Some more guidance on the last tax credit item that we'll talk about here. Secure 2 gives small employers with 100 employees or less a tax credit for permitting military spouses to participate in an eligible defined contribution plan that provides certain benefits to all military spouses employed by the employer. That's beginning in tax years after December 29th of 2022. So the notice covers 3 questions in relation to this tax credit. So to claim the military spouse eligibility credit, the employer must meet the definition of an eligible employer for each of the 3 tax years that it intends to claim this credit. The 3-year credit period begins when a military spouse begins participation in the eligible defined contribution plan, and the employer may claim the credit for any taxable year that begins after December 29th of 2022 that remains within the military spouse's 3-year credit period. And that is going to be even if the military spouse's 3-year credit period started in a prior tax year. So for example, if the employer had that eligible defined contribution plan in 2022 and that military spouse was participating in that plan at that time, then the employer would still be able to claim the credit for 2023 and 2024 taxable years.
Thank you for joining us on this grab bag notice video, and feel free to watch the other videos about this important topic.